Hey everyone, my name is Sahil and this is my Perseverance Academy. Now in the past also I mentioned that I spend almost 8 to 10 hours a day understanding the market, doing my research and identifying companies, studying their business. So in the past I have received multiple requests to share my approach towards identifying the right stocks for investment. So in this video I thought of giving you a brief overview in terms of how I approach my research. Again, this video is only for serious long-term investors. If you are someone looking for stock tip, then this video will not be of any help. But if you have a knack to identify good companies doing that research for long-term wealth creation, I think this video can be a good starting point. Of course, this is not possible to cover everything in single video, but I've tried to consolidate and compile this video in 5 steps. So let's get started. The first step that I do in identifying the stock is basically to keep myself updated with what is happening in the economy. What are the key themes? What are the trends both at global and local level? Then what are the government policies? Along with what is central bank doing, and then basically I try to identify what are the tailwinds and headwinds. So very simple. See, ultimately if you want to identify the good stocks, first of all you need to understand what is happening in the economy, because what happens if the economy is doing well, obviously the sectors would do well and obviously the stocks within that sector would grow. So ultimately it's all linked with the macro events and everything. The question here is how to identify the right themes, right trends. So I'll come to that. But before that, let me just help you understand what are some of the key trends and themes in the economy. See, first of all, one of the biggest theme is the growth of Indian economy. If you want to create wealth in Indian market, the first thing you need to do is you need to understand what are the opportunity in Indian economy, and that's where there are immense growth potential. We are the fastest growing economy in the world. We are the youngest nation with 144 crore people. There's a big trend of increasing income and spending level. Of course, we are one of the biggest consumption market. Then digitization is also driving the lot of growth in terms of your UPI payment, be it your GST and all of that. And we are bound to become third largest economy. In fact, I did a video on YouTube also explaining why you should invest in India now. And it is not just me, a lot of experts all over the world agree to the fact that India is one of the brightest economy in the entire world. So one thing is very clear, that Indian economy is bound to grow. Now, the interesting thing is, what are some of the trends? What are some of the themes that are looking very promising in India? So this is just a slider to help you understand what are the themes that I really find promising, because once you have this understanding of right themes, it will be easier for you to narrow down to the list of stocks. So first thing is, without a doubt, the electric vehicle is one of the biggest theme in 21st century. 20th century saw the transition to petrol and diesel vehicle, and 21st century is all about electric. Now it is very important to identify the entire value chain in that electric vehicle process, because at the very end you of course have got the two-wheeler companies, three-wheeler companies and the four-wheeler companies that manufacture those electric vehicles, but you also have many auto component suppliers that supply component to these companies, right? So try to identify the entire value chain of that particular system. Of course, you also have companies setting up the charging station, companies that are actually producing that green energy. So green energy is going to be a very big trend, be it your solar energy, wind energy and even hydrogen energy, right? So identify companies that fall into this particular zone, right? Then another big trend I think is the credit facility in India. See, we are a country with more than 140 crore people, but still there are nearly 100 crore people that live in rural part of the country, and many people, millions of people, still don't have access to the credit facility. So if India has to become $5 trillion, $10 trillion economy, this particular section of the society has to be served. So we are still a highly underserved credit country, and there's a huge growth prospect for lending in our country, right? And not just to these small people, small vendors, even if you look at ourselves, if you want to buy a house, we want to buy a car, we go and take loan, right? So this lending industry has got a bright growth prospect, no doubt about it. Apart from this, if you look at it, there's an entire financialization theme in India. So earlier people used to invest in FD and the gold and real estate, but there's a shift in trend where now people are realizing the importance of investing in mutual funds, investing in stock market. And that's where, because there are a lot of white collar jobs that have been created. So people who get fixed salary, they want to create wealth. And obviously the kind of return you get in fixed instrument like FD, it's not that much. In fact, it's hardly able to beat inflation. That's where I think investment in Indian economy and financialization as a theme across your wealth and wealth management domain, be it your DMIT industry and your RTA and even AMC industries. So they are going to benefit a lot from this. Okay, then another big trend is your China plus one strategy. We have discussed it multiple times. We are in very interesting days today. Trust me, if you look at the manufacturing industry, China is no doubt the global leader in the world. But of late, what is happening is China is in war with US, basically a cold war. And because of that, a lot of companies want to reduce their dependency on China. And that's where India, with Indian government focus on manufacturing with schemes like PLI and a lot of other things, a lot of companies are getting incentivized to set up their factory in India. And even Indian government is encouraging domestic manufacturer to set up manufacturing facility. And that's where I think that China plus one has created immense opportunity in Indian manufacturing space. Again, manufacturing is a big umbrella. Within that, you have got a lot of other sectors. But overall, this theme of China plus one is a very, very interesting theme. Then of course the Indian defense sector, where Indian government has already banned the import of lot of components and subsystems and focusing on giving priority to the domestic manufacturers. Right, so these are basically the themes that I identified. Of course there are more, but the idea is how do you get it? So I'll come to that. Apart from this, I've identified few more themes. For instance, consumption is one of the biggest theme. Obviously your salaries are increasing, people are spending a lot of money today. Today, people don't even think of buying an iPhone worth 80,000, even if they are earning less than that, right? Because of the EMI facility. So all in all, spending, consumption is going to be huge. And of course, this theme has got a lot of subsector. One of them is, of course, the QSR chain. Because nowadays, people like to go out, eat. This frequency has increased and the preference for fast food because of our fast lifestyle. So again, QSR is one of the sector. Then of course the overall consumption theme is huge. Then another theme I think is very interesting is your infrastructure theme. Indian government is focused big time on building the infrastructure across your airports, road, railway, and that's where I think companies involved in this overall infra play has got a lot of advantage and a big tailwind in this space. Apart from this, healthcare industry is of course growing big time. The lifestyle issues, the lifestyle problem are creating a lot of issues. So entire value chain across your pharma industry, hospital, and even your diagnostic companies are bound to grow. Apart from this, of course, another big trend is electronics manufacturing. Indian electronics industry is bound to grow big time. And this is again a big tailwind for this. And another industry is your hospitality across your travel, tourism, and all of that. Right? So these are some of the trends that I identified with my research, that the time that I spent, and this helps me identify ideas where I can invest my money, right? Of course, these are just the ideas. Now the next step is of course to identify stock. Before that, a couple of more information that I want to give. It's very important to have a close eye on the macro environment. What is happening in the economy in terms of inflation? What is happening in terms of interest rate? Again, I've done a video, the role of inflation, interest rate on your stock market, how it impacts and all of that. But net, the point is you got to keep a track of macro events. You got to keep a track of important themes and trends at both global and domestic level. Then another interesting aspect is to keep a look at tailwinds and headwinds. For example, tailwind basically means sectors that have a positive push because of external factors, and headwinds that have a negative influence. So tailwind example is your defense sector. Of course, Indian government has created a huge tailwind for defense industry. Headwinds, if you ask me, IT is facing headwind today because of slowdown in US, right? So it's important to identify which sectors are facing tailwinds and which sectors are facing headwinds. This is the idea. Now the important question is, how do you keep a track of what all are the important themes, what all are the government policies? There's no simple solution. The only answer to this is keep your eyes and ear open. That's it. How do you do that? You got to follow Twitter, you got to follow print media and some of the research report. That's what I personally do. If you look at it, Twitter actually gives me all the information that I need. Earlier, I used to depend more on print media. I don't watch TV. So earlier I used to depend on print media, but now I think Twitter is good enough. In fact, of late I have also become very active on Twitter. I hope you are also following me. So Twitter is one place where I think you can get all the information. In fact, it's boring. Let me be very honest. Of course, it's not that interesting like your Instagram. But again, if you are really looking for information, Twitter will give you that. In fact, I also keep posting about what I am learning and the kind of research that I am doing, and I'm very active. So this is one of the important source if you want to stay updated with what is happening in the economy. Of course, you got to follow some important channels and some important people. So do that if you want to have a track of this. Another interesting is you can look at the research report. So if you visit Trendline website, there's a section called your research reports, and within that, if you click on all research report, you will basically get an access to all the brokerage reports for free. Okay, you just need to log in, and here you will get two things. One is sector wise report and another is your stock wise report also. If you scroll down, you will get, for example, report for Nestle India, ICICI Bank, and of course these are stock level report, and you will also get your sectoral report. You also have the filter to do that. So filter stocks, and then let's say if you want to filter for, so you can even filter it by broker. So basically, let me just open one of it. It will give you a good understanding. So let's say if you want to understand, for example, let's say ICICI Security has given a buy call on ICICI Bank, target is 1195. Right? So this is a stock level. If you want to understand the reason for it, you can click on this PDF. That will help you understand a lot of things. For example, you will get a lot of stock names here. These research houses keep publishing. In fact, they also do it for the entire industry. For example, look at this. This is a sectoral update on telecom services. If you click on PDF, you will get an access to understand what is happening in telecom sector. So this is a report as of 28th October on the telecom space. Likewise, you will get a lot of sectoral updates. You will get a lot of stock level updates. And this is basically a good source to stay updated with. Of course, this is not a buy or sell call by any means, but it gives you good understanding in terms of what factors, what brokers houses are thinking about the sector, and of course about the individual stock. So all these sources help me list down the important themes and then help me identify the right stock. So that's where second step is the simple one, where you got to identify top stocks for each sector, theme and tailwind. The question here is how to do that. See, this is one thing that it will not happen immediately. You got to spend time in stock market, and then with experience you will get to know what all are the companies that are leader in each sector. So over the period of time, if you ask me, what I have done is I've actually listed down all the stocks. So this is my top 200 super stock portfolio. By the way, this is all available for free also on my website. If you visit my website and go to courses, there's a free course of free live tracker of top 200 plus stocks. Basically, I've listed down all stocks. This is, by the way, live tracker that I've created with Google Finance. You can see the various industry: agrochemical, AMC, auto auxiliary, automobile, then your banks, then your capital goods, chemical, then defense, electronics, FMCG, lot of companies. And I've also got the market cap, current price, PE ratio, 52-week high, low, and the yesterday closing price. So this basically is a repository of top stocks that I am tracking for my investment, of course, for sharing knowledge purpose. And this is one of the starting point. Okay. So there is one more way to do it. So if you visit Screener website, this is a very simple way to do. Let's say if you search Infosys. Now you want to, let's say, identify the IT company, the companies that fall in IT space. So let's say you search Infosys. If you scroll down on Screener, there's a section called Industry, and that says Computer Software Large. If you click on this, it will showcase 8 companies that fall into your large companies and computer software space: TCS, Infosys, HCL, Wipro. Now let's say you want to know mid cap companies or small cap companies. So let's say if I type Persistent, again you got to know first name, then only you will get the reference. So within Persistent you will see computer software mid small, right? There are 225 names in this list. You can go through this list. Again, this will give you a good understanding to identify the companies that fall into this particular medium to small companies in software space. And this is applicable for everything. Let's say if I search ICICI Bank and I want to know what all companies, what all banks are there in this space. Look at this, banks, private sector, there are 26 names. Likewise, let's say if I type Dixon Technology, I want to know what all companies are there in electronic space. All I need to do is click on this pair and click on electronics consumer. It will show me the list of companies in consumer electronics domain. Again, this is electronics consumer. If I type Keynes Technology, it will give me the peers in your electronics component. So basically the idea is using the screener tool, you can identify companies that are into a particular category. So this is again a very interesting way to list down companies and build a repository of right companies out of the universe of, let's say, 1,000, 2,000 companies that you have. Okay, once you do that, once you identify the top companies, the third step is to do the quick screening on screener. See, ultimately, if you have got 250, 300, 500 stocks, it's not possible to deep dive. That's where the important question here is, how do you really identify whether the company is right or not? For that, you got to do deep dive. And before that, obviously, you can't do deep dive in every company. So you have some filter criteria that you got to apply. Personally, I do that to filter out companies that I don't want to deep dive. And what are some of the parameters? The parameters are very simple. I avoid companies that have got very volatile growth in revenue, margins, and profit. So I don't like companies that that are today here and then tomorrow goes up, then next day goes down. Day in the sense quarter or year, right? So I like companies that are growing consistently. Of course, there can be exceptions here and there, but ultimately the idea is to identify companies that have a consistent growth across your revenue, margins, and profit. I also don't like companies that has a very volatile margin. Right? So that is point number one. Second, I avoid companies that have got very high debt level. Like debt to equity of more than 1, I think it's too high for me. So that is another point. Then I avoid companies with very low profitability. So let's say ROA and ROC, these are two very important parameters. If they are very low, then I avoid them. Then I avoid companies that have consistent negative cash from operation. Cash is very important in business, and especially cash from operation. If company has got negative cash from operation, that's a red sign. Then I avoid companies that have got no FIDI holding or very high public holding. Ideally, I want a good promoter holding and then some holding from FIs, DIs, and low public holding. That's the ideal scenario. I avoid companies that have got very high public holding because that becomes very volatile. And if there is no FIDI holding, mainly, of course, there can be some exceptions, but mainly if FIDI holding is not there, then it becomes very risky. And of course, if FIDI are not investing, then there should be some reason for it, right? Of course, in micro caps, normally FIs, DIs don't invest, but micro caps anyways are too risky. So basically, this is just my quick filter criteria for shortlisting companies. For example, I'll just give you quickly how I screen it. So this is one example I want to take. KPIT Technology. First of all, what I do is I go to this profit and loss. I look at year-on-year growth, how it is doing from 600 to 2000, then 3000, 4000. Okay, consistent growth. Then if you look at net profit from 55, 148, 276, 387, again growing consistently, that too at very good rate. Right? So, and then if you look at margins, 14, 13, of course, during COVID, there are exceptions. Companies, net profit, sales, everything went haywire because of COVID, but then that is an exception. Net, you clearly see that the margins are also consistent. So, first parameter is checked. Then second parameter was high debt level. So, I checked the debt. Company has got debt to equity of just 0.2. Again, it's checked. Then if you look at very low profitability, so I avoid companies with low profitability. Look at this, ROC and ROE, again more than 20%, which is again great. Then I avoid companies with negative cash. So how do you check? Go to cash flow, check cash from operation, again consistently posting good cash from operation. So, and then of course FIDI holding. So if you look at investor portfolio, it has got good promoter holding, FI holding, DI holding, and just 21% public holding. So this is a good company that you can filter and can do deep dive, right? Again, there are companies that don't that don't have these criteria, but there's no point discussing them. So once you do that, once you filter out those companies, fourth important step is I do the in-depth study. The question is how to do in-depth study. So there are a few sources that you need to follow. First of all, you got to look at the annual report. And then you got to look at the con call, research report. Then there are other sources like company website, news article, interview. How to do that? Let me give you an understanding in terms of how to do the in-depth study. Okay, let's first try to understand what are important parameters I look when I do in-depth study of any business. So first of all, I try to understand what is the business model of the company, in the sense how it is making money, whether it is a product based company, whether into service, what all are the breakup across geography, across product division. So I try to understand all these details. Second thing I look at it is the key moat of the business. Ultimately, there are so many companies in particular sector. So for a particular company that I'm studying, if that company has to do well, it has to have the key moat. Key moat in the sense, the strength that makes it unique. And if that strength is there, then only it is going to be sustainable. Because if the strength is not there, if the moat is not there, it is not going to be sustainable. Now, what are some of the examples of key moat? A brand name could be an example. For instance, the kind of brand name Pidilite has built with its Fevicol brand, Asian Paint has built, Titan has built, right? So that brand name can be one of the moat. Then distribution can be one of the moat. For instance, HUL has created the kind of distribution, ITC has created. This is not easy to replicate. Apart from them, that patents are one of the way to look at it. So there are a lot of things that you need to understand. What are the strength of the company, that you need to look at it. Then next important thing is, how is the leadership? Because ultimately the leader is the anchor of the ship, and it's very important for the leader to have the right experience, right expertise, and of course that governance has to be there in the company. So right corporate governance is very, very important. I try to understand all of this parameter by trying to understand the background of the leader, the board of director, and all of that. Then important parameter is financial performance. As discussed before, I look at the growth, I look at the profitability, I try to understand the debt, the leverage structure, I try to understand the cash flow. So these are some of the important things that I look in the financial performance, apart from the key ratios. And then very important aspect is, what is the future growth driver? I mean, what all factors are going to result in the growth of the company, right? So that is at very high level. And then what all are the growth plans of the company to capture the opportunity that company has got, right? The growth plans are also very important, whether the company is doing capex, whether the company is expanding its business, introducing new products, right? So that is there. And then the very important aspect is the key risk. So all these things, the growth thesis that I have built, I want to understand what all factors are there that can actually dampen this growth thesis, or basically can negatively impact the growth thesis that I got it from the initial analysis. So this key risk is also very, very important aspect. And finally, the important aspect is valuation part. Now, important point here is how to get all these information. So there are 2-3 sources that I actually follow. First is the annual report. Second is the con call. Basically, annual report is published every year, right? Con call is generally published after every quarter. So after every quarter, company conduct analyst call, where the analyst ask questions and company answer them. This is the holy grail. This is very, very important aspect of analyzing any business. Then there are research reports that are published by brokerage houses based on the con call and their research, that I try to understand. And how do I get this information? I get this information on company website. I get it on Screener, and of course follow some of the news article. And in fact, I follow it on Twitter, and I also keep a track on interview, which also get on Twitter itself. Now let's take one example and try to understand how to approach this. So first of all, let's just continue the example of KPIT. First start with the business model. So on top, you can see this section called documents. If you refer to this, you will get annual report. You will get the latest presentation. Basically, after every quarter, all majority of good companies, they publish these quarterly presentation updating about it, because annual report is only published once in a year, and these presentations are published every quarter. And then you have got the transcripts also, which is basically the con call. First of all, I open the annual report. So in annual report, what all factors I look for? 2 very important points. One is, I try to understand the letter that the CEO, MD, or the chairman of the company that has published. So on top, if you look at it, every annual report would have this kind of chairman's message. Of course, before that, you will have few other things also, like what all are the important drivers in the company, how things are going, what all are the numbers, and all of that. But next very important aspect is the chairman letter. Why this is important is because it will give you a good understanding in terms of what is the vision of the company, like what the leadership want the company to do. Then it also talks about the performance in the past for the entire year and the future, the vision of the leadership. So that gives you a very good idea in terms of where you can see company down the line. So for example, here you can see the chairman's letter, Mr. Ravi Pandit, who has elaborated in detail about the standing of an extraordinary junction. So basically the electric mobility that we are talking about, the 21st century revolution, the world of mobility. Then of course, this is in detail, you got to read it. So what is changing in the world of mobility? What all are the latest advancement? I trust me folks, this gives you a very good understanding in terms of where the industry is going towards and how is the company going to, what is the growth plan of the company. So that's chairman letter, right? Then second is also you have letter from the CEO and MD as well. So this is the first thing you got to read. Once you do this, you will get a fair understanding. Second important aspect is every annual report will have this section called management discussion and analysis. Before that, you also have board's report and all of that, but this is very important, management discussion. This will give you the clear picture in terms of the macro environment and the industry analysis as well as the future plan of the company, and this is where you will get clear understanding of what is the plan for the company. Let me just open this particular section. There you go. So this is the management discussion analysis section where you will see the global economic review, basically the macro analysis, then the key industry trends, which will give you a good understanding in terms of what is happening, what all are the opportunities, what all are the challenges, and then you will get again lot of details, and then you will get to understand what the company is doing in terms of its growth plan. Okay, company's overview, what all are the products and services, financial performance. So this is again a very, very important section that you must read if you want to do an in-depth study of a company. So two important parameters we identified in annual report. Apart from this, every quarter the company also publishes the presentation. So this gives you a broad understanding of what has happened in that particular quarter and the plans ahead. So you can see the performance for the latest quarter, and then you will also see the management guidance. For instance, KPIT commands a premium valuation. What is the reason? The reason is again, it is a fundamentally strong company, but ultimately it is the growth prospect that drives the valuation. So its management is saying that we have raised our constant currency revenue growth outlook for FY24 to 37% plus and increased EBITDA margin outlook to 20%. That's brilliant set of numbers, right? Apart from this, you will get a lot of other detail like new engagements, the key deal win, and then of course the FY24 outlook, and a lot of other details. So this presentation will give you a good understanding in terms of the plans, and another important aspect is the transcript. So like I said, after every quarter, company publishes the presentation and then it invites the analyst to ask the questions, and that gives you a very good understanding in terms of what you can expect from the company. Again, this is a very boring document, but trust me, the entire information, the in-depth study, if you want to do, it's all there in the company. So it's normally around 10-15 page report where you will get all the answers, and this is one of the most important part that I try to understand whenever I do the analysis of the company. So I hope you got a fair idea, the annual report, the presentation and the transcript, and of course you can get a lot of detail on company website also, which you can directly access from here. Okay, so this is the high level understanding. Apart from that, of course, you got to look at the financials that I get it from the screener directly. So first of all, like I said, I look at the growth. Clearly on the sales front, company has been growing consistently and that too at a very fast rate. The margins have been pretty good. Of course, during COVID, a lot of companies posted degrowth and fall in profitability, but that is an exception. So you got to look, exclude that. Then you got to look at margin again, consistent 19% margin. Net profits growing at a very fast rate. You can clearly see the growth profit. 3-year profit growth is 35% CAGR. Trailing 12-month revenue profit is 56%. Apart from this, I look at the borrowing. So borrowing is 376 crore and debt to equity of the company is 0.2. So the leverage structure is well under control. Debt is not that high. Then I try to look at the profitability in terms of ROE and ROCE. So again, ROE and ROCE is looking brilliant, about 20%. You can also click on this ratio on top and can see the historical ROE and ROCE. Although it just shows historical ROCE, so I also do my calculation to identify the ROE. Apart from this, you can also look at cash flow to understand company's cash position from operating in activity, which is also very important. It has to be positive. So these are some of the important parameters that I look for, Apart from this, you can look at the balance sheet to understand the assets in terms of cash and cash equivalent. Apart from this, you can look at the fixed assets. So fixed asset growth is again very important, which means companies investing in assets. So these are some of the important things. Apart from this, you can look at the cash conversion cycles, working capital days, and of course the shareholding pattern speaks a lot. Clearly you can see the promoters have a decent holding of around 40%. FIs are holding 25.6%, DIs holding. So strong confidence of both FIs and DIs in this company. Public holding is at 21%, and in fact it is consistently reduced in last 5-6 quarters. So weak hands of public are selling and strong hands of both FIs and DIs are consistently buying KPIT. That is a positive sign. I hope you got a fair idea. Of course, it's not possible to cover everything in detail. I do a lot of these case studies and cover a lot of businesses on my YouTube channel. So if you really want to learn and study how to do it, I think you can watch my previous videos also. So this is a high level understanding. I hope you got a clear understanding like how to do the in-depth analysis. Now, once you do that in-depth analysis, of course, you will build a conviction. One last thing that I want to mention, which I missed it, is the valuation part. See, if the growth is good, profitability is good, company has got leadership, it has got key moat of, it has got sustainable moat, then obviously in an Indian market, it's difficult to get, these kind of companies available at lower valuation. So this is always going to be a challenge. So if business is great, if the profitability is high, future is bright, then obviously valuation will be on the higher side. The question is, what is the right valuation? Although this is not possible for me to cover the valuation part because it itself is a in-depth analysis. But for instance, here it is, having a PE of 66. Is it expensive? Yes. But the point is that KPIT cannot command a PE of 20-25 because it's a high growth company. So it will command a premium. Considering the fact that future of 21st century is all electric and KPIT is one of the leading EV software company. So it will command a premium and the way it has been growing. The only question is what is the right PE should be? Maybe 50, 55, 60, I don't know. So one of the ways you can probably, if you find good potential in the company, you can consider investing in systematic manner, right? Because ultimately look at it, it is just a 32,000 crore market cap. I won't be surprised if in 10 years it grows 10 times in terms of market cap, in terms of size, right? Because that's the kind of opportunity it has got. So obviously it might look expensive today, but 5 years down the line, it would look cheap as you compare it, if you compare it with today's level. So again, it is a tricky call how you look at the valuation, but sometimes there are companies that are growing at a fast rate but available at decent valuation. So yeah, the PE ratio is again a very important aspect. Okay, now the final thing is the step number 5, which is once you do the in-depth analysis, build your conviction, and let's say you invest money or let's say you put it in watch list, the important step is to track the stock and the sector. Again, how you do that? You got to look at the quarterly results as well as the con call, and we have discussed about it. Screener and NSE website also you will get. So let me just quickly show you how to get it on NSE India website. If you visit NSE India, so one way is you look at it here on the screener document section you will get. Another way is if you visit NSE India and let's say you type KPIT and let's say you click on this particular link, just click on this corporate disclosure and just go down and see, you will have this presentation here, investor presentation and all the documents. So you can access it from NSE India or even BSE India website will have this detail. Apart from this, you can also access these details from the company website. If you click on any website, there's an investor tab. If you click on that, it will give you the documents here. So you will get all the documents on the company website as well. I hope you got a fair understanding. Now, like I said, you got to keep a track of this stock just to help, in case, let's say if company has given a good result, then you should know what all factors have contributed in the growth. If a company is not given good result, then you should know what all factors resulted in degrowth. Because if the company is good and if there's a fall in the, let's say, result, if the results are not that great, then let's say if the reason for that is due to external factors, let's say due to inflation, slowdown in US, then it can be an opportunity, right? For instance, IT sector is not doing well, but there are good companies. So maybe there can be an opportunity if the valuation is good, right? So basically you got to keep a close eye on the stocks where you have invested and of course the stock that are part of your watch list. And how you do that? You can track them on Twitter. like if you follow good people, a lot of people track those companies, so you can get information from there. Even I do a lot of those tracking, so you can also explore my profile. Then there are interviews that you will find on news channels. This is also a good way, because after every result, the leadership of these companies, they visit the news channels and they give their interviews, so that also helps. And there are brokerage house views, like we discussed earlier. You visit the Trendline website, and on top you have these reports, and you get access to all the reports. In fact, if you just want to know any specific report being published, so let's say you want to know if there's any report being published about KPIT. If you click on this, on top you will see the report section. Look, here it is. Just click on this, and it will give you the detail whether there is a report on KPIT. Look at this. So the last report that was published on KPIT was 25th October by Axis Direct, where it has given a target of 1500. Currently it is at around 1200, so 25-26% upside from Axis Direct. Likewise, you will have a lot of other brokerage houses giving targets. The interesting aspect here is not to look at the targets, but the PDF, where the brokerage house will give the reason for it, why they are bullish, or let's say why they are underweight, right? So that gives a very good understanding in terms of whether you should, building your thought process. Because let's say if you want to invest in a company, and let's say, let me just open it and let me just show you what all kind of information you can find it. So there you go. So this is a report from Axis Security. They will give their investment thesis, why they think it's an opportunity, and of course likewise you will get negative views also, the key risk factors. So these kind of brokerage house report also give you a good idea in terms of building your thought process. Once you do all this analysis, then you got to think whether you want to invest or stay invested, whether you want to accumulate, whether you want to reduce, and how you want to go about it. Now in this particular step, what I've done is I've actually created an Excel tracker where I track the quarterly results along with the performance, my review on the results, as well as valuation, along with my comment. That this is available for those who have enrolled in my weekly course. Basically, I have a course on weekly where I share one exclusive video per week, where I share my investment strategy in stocks where I am investing, my thought process. Of course, I also track the macro parameters, what all factors impact the sector and the stock. So basically, this is an initiative to build a community of long-term serious investor. So yeah, this is it about my overview. If I quickly summarize, step number one is you got to stay updated about the latest trends, your key policies by government, central banks. That gives you a fair understanding in terms of which sectors are looking promising, and then of course step two is identify leaders in those sectors. Third step is quick screening on screener to filter out bad companies, and then of course once you have a good universe of stock, you got to do an in-depth study. Finally, once you do it, you got to keep a track of these companies. So this is the overall framework that I personally follow. Of course, initially it used to take me a lot of time, but now over the period of time, I have learned a lot. Of course, I built that knowledge base also. So now it's a bit quicker for me, but still I spend a lot of time doing the research. Apart from this, it is not just about research. Stock market is also more about your behavior, your mentality, your psychology, and that's where you got to condition your mind about, in a certain direction. For instance, one of the mantra that I follow is I don't run behind stock price. I always run behind great business, because I know if the business is great, stock will eventually do well. The problem is majority of people run behind stock price. If stock price goes up, they think company is great, and if stock price fall, they think company is bad. But actually, if the stock price fall due to any external reason and the business is good, it's actually a buying opportunity. This kind of information you will only know when you do the in-depth study, right? So that's point number one. Second is I do a thorough analysis before investing in a business, and that helps me build a conviction. And once I invest for long term. I don't just invest for 1 quarter, 2 quarter down the line. Third is I don't invest more than 10% of my money in a single stock. This is one of the rule that I'm following. No matter how great the potential is, it's part of my risk management aspect. Then another important thing is I always control the emotion of fear and greed. This is again a very, very difficult part to do, because the thing is when we are in bull run, this greed takes over and people become too greedy, and when we are in bear market, fear takes over. So it's important to have a fine balance of emotion across fear and greed. Don't get too greedy, don't get too fearful. Of course, you got to do opposite. If there's a correction, you can become greedy if the valuations are good. And if there's a bull run, and let's say if markets has rallied a lot and the valuations are expensive, you might have to become fearful. Then very important aspect is always look at the long-term bigger picture. See, the thing is, a lot of people, they try to track daily activity, what is happening on daily basis. When you do that, you tend to lose that long-term bigger picture, and that's very, very important if you want to invest for long term. Then next important point is don't marry a stock. There can be change in fundamentals. What happens is when we invest in a company, we have that kind of connection, bonding, and sometimes if the stock doesn't do well, we tend to ignore it. So it's important not to marry a stock. There can be a change, and if that happens, you got to sell it, right? Then another important thing is stay away from market noise, because these days you get bombarded with various information across social media everywhere, and that you tend to lose your bigger picture. And that's why I try to not consume a lot of market noise and stay focused on my investment. Apart from this, two very important characteristics of a long-term investor, fundamental investor, is patience and courage. You can't create wealth in few days, few weeks. You got to invest in good business and stay patient. So that is very, very important, and of course have the courage to take that hit in your portfolio. And the final piece is mistakes are part of investment journey. See, there is no expert who has not made any mistake. I'm sure every one of us would make mistake in investment journey, because nobody is perfect. The important aspect here is to keep learning. See, ultimately, I'm sure if you invest in, let's say, 10 stocks, not all 10 of them will become multi-bagger. It might happen that, if all you need is, let's say, 5-6 companies out of 10 stocks, if that they can generate good return, I think your purpose would be solved. So always try to look at it from this angle, and the only way to do it is keep learning and keep evolving. I hope this video will give you a good direction in terms of how to approach fundamental analysis and my personal framework of how I do all this analysis. If you find this video useful, do share it with your friends and family, and I'll see you next video. Till then, take care.